What's going on, you guys, and welcome to my channel. My name is Ricky, co-founder of Ricky and Nikki Accounting Services. And what we do over here is we make taxes very easy to figure out, and we keep you updated on all things tax related. So this is my first official video on this channel. I just made the channel today. I posted a couple of reels and things like that, but this is the first official video. So I want to say welcome. Thank you for being here. And what we're going to do over here is, update you on all things tax related, teach you about different business entities and what are the benefits of them, different tax strategies and deductions that you may qualify for as an individual or a business owner and content creators. And the biggest thing that we do here is we focus on content creators and business owners. So if you are one of those, you made it to the right channel, and be prepared to learn. So what I want to talk to you guys today, I wrote it down, I made a list of everything I wanted to talk to you guys, but we're going to talk about updates for small businesses for the 2024 tax season, and some of the deductions and other dates for 2023 tax year. So it's almost tax season. We're about 33 days away from the start of it. So if you're not ready yet, make sure you get your books together, get your bookkeeping right, your tax, your expenses, all your transactions. Keep everything ready, because you don't want to be scrambling. It's already over. Fourth quarter is already almost over, so you want to make sure you're up and ready and good to go. And if you're not, and you're just stressed out, get with a tax professional. We especially us, we'll definitely help you over on this side. So let's get to it. The first thing I wanted to talk to you guys is the sunsetting of bonus depreciation. So if those of you who don't know what bonus depreciation is, it allows you to depreciate the full amount of the asset in its first year. That's what the bonus depreciation is. Because regular depreciation is when you depreciate an asset over its useful life, but the bonus depreciation lets you deduct the entire 100% in its first year. That started last year. So those of you who did not know, now we're going into the 2023 tax year. It's descending. So now you won't be able to do the full 100. Now it's going to be, for this coming year, it's going to be 80%. The 2024 tax season is going to be 60%. 2025, 40%, 20%. And then it should phase out. But we all know with taxes and the IRS, things are constantly changing. Just like this Corporate Transparency Act, that's supposed to be starting on January 1st. And within a matter of 2 weeks, there's been updates and changes. But that's a different subject for a different day. That's very important, especially for business owners. But we're going to talk about that in a different video. So yeah, that's the descending of the bonus depreciation is going to be lowering. So for 2024, it's going to be 80% in the first year. The most you'll be able to use your bonus depreciation is going to be 80%. So make sure you remember that. Oh, quick note. Not all states conform to bonus depreciation. It's a federal deduction. So you're going to want to do your research. And if you don't have the time to do your research, like I said earlier, get with a tax professional so you can know what to do and what the right adjustments you want to make for depending on what state you live in. Next is the Section 179 deduction, and it actually increased. Section 179 deduction is mainly for business owners. A lot of content creators use this because it helps them deduct in full all of their equipment to make the video. So for instance, I have a tripod right there, I have a ring light over here, my camera, all these things would be fully depreciable with the Section 179 deduction. So it actually got brought up. Let me see how much it got. The max deduction now is going to be $1,160,000 on the first $2,890,000 of qualifying expenses that was put in service in 2023. I almost left that out. So if it was put in service in 2023, that is going to be the max amount that you'll be able to deduct. I don't know any content creators who have that amount of deductions with that amount of expenses, I should say, but you have that option. That's good to know. How much did I just say? 1.16 million? I don't know. If I was you, I'd take advantage. Another one we have right here. So this is going to be very helpful for any of you who does Lyft, Uber, DoorDash, any of those food or delivering or like a taxi driver. This is going to be for you. The standard mileage rate. It changed last year. Actually changed last year, like midway, or this year technically. It changed within the middle of this year. I want to say it was about, I can't remember off the top of my head. It was like 58.5, and then it went up. It was like from January to June, it was like 58.5, and then from June to the rest of the year, it was like what was it? 62.5. And the only reason why I knew that off the top of my head is because for the 2024 tax season, it got raised up 3 cents. So it's going to be 65.5 cents per mile. Remember that. But yeah, like I said, which is an increase from the second half of last year. Next, we can talk about business meals. If you follow me on Instagram, make sure you do that. I'm going to put it right here so you can go ahead and follow me. And I spoke about business meals, how it's being brought down for this coming tax season, the 2023 tax year. It got brought down to 50%. After COVID happened, it got brought up to 100% because the government because we weren't allowed outside. You know, we all went through that. It was miserable times. It was great it was miserable time and great time because you got to spend a lot of time with family. But it was a very hard time because we were all locked in the house, and nobody wants to be locked in the house. Trust me, it's boring. And if you have children, oh my goodness, but especially the young ones. But anyways, yeah, so the government wanted everyone to help the food industry by going out. So what they did was implement that 100% deduction for business meals. So especially if you were a content creator, that was lovely because a content creator who reviews food. So like, for instance, I had a channel where I would go out to different restaurants, try foods, rate the food. So if that's what you were doing, you had the luxury of deducting 100% cost of your meal. Now it got brought down to 50%. It's officially being brought down to 50%. The only exception that there is for business meals is if you, to get 100%, I should say, because you're going to get the 50% for any business meal, or like if you're going out doing business transactions and meeting with a client or doing anything travel-wise involving business, it's going to be 50% no matter what. But the exception is team events. So if you're doing like a team bonding event where you take all your employees out to, I don't know, to some type of event or a baseball game or movies or anywhere as a team's collective to build the bond, that is 100% deductible. So if you have employees and you want a nice little tax write-off, there you go. Build your relationship with your employees and you benefit tax-wise. Why not, right? This one, I like this one. This one is a new one I learned about. It's called the Qualified Business Income Deduction. Now, what that is, it gives you a 20% deduction on personal income tax. And this is a federal tax deduction. So not all states are gonna allow QBI. That's the abbreviation for this deduction. But yeah, not all states follow it. And I can actually list the very few states that do. So the states that do allow it are right here. As we have Colorado, Idaho, Missouri, Ohio, Oregon, and North Dakota. So if you live in any of those states, you will be able to use QBI on the state level as well, not just federal. So there you go. But an update on that is the threshold got increased to $182,100 for single filers and $364,200 for taxpayers who are filing jointly. Excuse me, guys, it is very late, but I wanted to make this video because I wanted to introduce you guys to the new channel. I wanted to start making content on this channel. I've been talking about it for a while, and I had time today to actually make this channel. So I was like, why not go ahead and start making this content, especially because the reason why I'm doing this is because I want to inform you guys on all of these different tax write-offs, because these things aren't spoken about. It's like the government don't even want you to know about it, but there are rules and laws within the tax code that allow you to pay little to nothing in tax legally too, which is crazy to me, because I was never taught this. Like, a lot of us aren't taught this, especially in schools. You don't know about this. The only way you hear about these things is if you do your research, or you had a family member who was in this type of financial type of field or tax field. But needless to say, it's not spoken about, and I am for the people, especially where I come from and where people come from. We're left behind. We're not really educated on these type of things. So that's what I'm here for. I want to be able to break things down for you in a way that we can all understand, because I've had conversations with people about taxes and they're like, oh no, I don't know. I've never did taxes. I don't understand the verbiage and the lingo. I use my own lingo. I take the courses. I graduated from college, got my accounting degree, and that's always been my goal, is to help individuals who come from where I come from, because we're just not taught these things. And it's the way the verbiage on these things, on all this information it's kind of hard to understand. Like, you really have to sit down and read it, and some people just don't understand it. So that's the goal here. We make it very easy to understand and figure out. So if you want to learn, definitely subscribe to this channel, like, comment, and just be active, because I'm going to always come to you guys with the new updates on everything that's going on. So let's get back to this. Let's see what we got here. Oh, actually just made a video on this on Instagram. So this is about the new update for the Form 8300. Those of you who don't know what Form 8300 is for businesses that receive cash payments of at least $10,000. So if you get $10,000 in cash or more from as a business, you have to file Form 8300. But the update now is it is mandatory for you to e-file. That's the update, because before you used to be able to file on paper. It must be e-filed, and you must e-file within the first 15 days with who? FECN. If you don't know who FECN is, I spoke about them a lot. That's this new Corporate Transparency Act. If you haven't heard about it, go ahead and check out my videos. But this form is going to be filed through FECN as well. FECN don't play around, you guys. FECN don't play around. It's not like one of these government agencies or it's pencil pushers. No, they're strapped up with guns and they're ready to penalize you if you don't follow all these rules. FECN is not the one to play with, you guys. They are not the ones to play with. So yeah, starting January 1st, 2024, all businesses must e-file from 8300, and you file this through FECN's BSA e-filing system. BOI, so beneficial ownership information. I don't know, I always get the second word wrong. BOI, beneficial ownership information. What is that about? You guessed right. FECN has something to do with this as well. So starting on January 1st, 2024, you're going to file your BOI report with FECN. Actually, before I even tell you like the things that you have to file, we're going to talk about who is not affected, because there was an update that I haven't got to make a video for on my Instagram or on my TikTok. So you guys are going to be the first ones to get this update. So boom, let's talk about it. Who is not affected? Because before it was any business owner. There was I want to say at first there was 3 exceptions. Then they brought it up to 23 exceptions. But before it was pretty much all business owners. Now let me tell you who's not affected. So sole proprietorships are not affected by this. General partnerships, large companies with $5 million in gross income. That one was one of the ones before that I spoke on before. That one's not new. Employers that have 20 or more full-time employees, that one's not new either. CPA firms, insurance companies, publicly traded businesses, and things of that nature. Now with that, I'm gonna talk to you about who is affected. So who is affected? S corporations, C corporations, LLCs, businesses who filed through the state, and foreign companies under the laws of foreign country and registered to do business in the U.S. Let's talk about what you would have to report, what you report on BOI. I thought I wrote it down, but luckily I saved it on my phone. You know, I'm always on point. If I don't have it, I know I put it somewhere else, but let's see where I put this. And that's another thing, you guys. That's another thing about me, is it's real, raw, and uncut. I'm not going to be trying to be all sedity and try to use verbiage and big words that you guys are not going to understand. I'm a real one. You know what I'm saying? I'm a real one. I come from the same places you come from. So I'm going to break things down in simple terms so you can understand the same way that I understand, you know? I'm not going to change who I am. So what exactly do you need to report? I have it right here. So you need to report your legal name, your business name, And any employee that is a manager or an officer, they would have to report their legal name and their home address as well. The address, the jurisdiction in which it is formed or first registered, the taxpayer identification number. These are all things you have to report with FEASN. I keep bringing up FEASN because these are the ones that you don't want to mess around with. They don't play games. They're trying to hit you guys with crazy penalties. And if you don't follow the BOI and the corresponding Corporate Transparency Act, you're going to be hit with some crazy ass fines. Oh, and jail time of 2 years. Like I said, I'm going to talk about that in a different video, but every time I see something that talks about FEASN, it just makes me think of that because I'm filing all my information with them because I'm not trying to get hit with no penalties. And I'm definitely not trying to do no jail time. Doesn't even make no sense. So it says every reporting company must report the following information about the beneficial owner. You need the owner's full legal name, birth date, and residential address, which I said, and not a P.O. box. You cannot use a P.O. box. It needs to be a physical address. And then you also need to report the unique identifying number from a valid government ID and an image of the document. So for instance, I'm a tax preparer, so I would need my PTIN, which that is the identification number that I would have to show them. What that is, for those of you who don't know, is my identification number in order for me to prepare your taxes. Let's see what else. Reporting companies formed or registered after 20. Oh, this is about correspondent. I don't want to talk about that right now. This is about the corresponding corporate. I keep saying corresponding when it's Corporate Transparency Act, and it's crazy because I know it. I don't know why I keep messing it up. Anyways. All right, we're going to talk about these last two, and then I'm going to end this video. So, the Secure 2.0 Act of 2022. That law has a bunch of different updates. I'm only going to talk about two right now because I don't want this video to be too long and redundant. I want you guys to be welcome to this new channel, learn a little bit about me and what I do and why I do it, and then give you some updates that's going to help you as a business owner. So, let's talk about this one. They have a credit for small businesses. It's called the Small Business Startup Credit. It is a 50% credit of administrative costs up to $5,000. And exception, so you can get more, you can get the full 100. You get the 100% credit if you have 50 or more employees. So if you have less than that, it's 50% of up to 5K. And then also the credit starts to decline, just like I was telling you about bonus depreciation. This is also descending. So the credit percentage declines after the third year. So the first 2 years, if you have 50 or more employees, you get the full 100%. So the first 2 years would be that. And then after that, the third year is going to be 75%. The fourth year, 50%. Fifth year, 25%. And after that, no more credit. And this is effective this tax year and moving forward. Last but not least, starter 401k plan. Now, those of you who have a job, work every day, and you're a regular W-2 employee, you probably know what a 401k is. It's a savings plan that your job offers you. They match dollar for the most part. It depends on the company, but they usually just match dollar for dollar. And the limit is 6K. And if you are 50 or older, you get to, it's called catch up because you're starting your retirement plan at a very old age. So they give you an extra $1,000. So your limit would be 7K. But as a business owner, you may have employees and they may not even know about a 401k because a lot of people don't even realize, because if you think of a 401k, you think of major companies that have, like, where you work a regular job, but you never really hear small businesses offer 401k plans. So this right here is for those individuals. So you get the starter 401k plan. It is the deferral only arrangement, and starting with January 1st, 2024, an employer any size may adopt a starter 401k plan so long as they do not sponsor another qualified plan the same year. So if you already have another retirement account, you cannot apply for the starter 401k. Employers must enroll at the deferral rate of at least 3% and no more than 15%. So depending on the employer, You can range it from wherever you want, but it cannot be less than 3% or over 15% of the compensation. And employees also. Employees may elect out just like any other job. If you don't want to have a 401k plan, you don't have to. If you don't want to save for your future, you don't have to. It's up to you. It's up to the employee. But there's that. And the same thing with the starter 401k, the same limits apply. It's 6K, and if you're 50 or older, it's that extra 1,000 you get, the extra catch up, so 7K. And with that, I'm going to wrap this video up. I thank you guys. If you like this video, give it a thumbs up. If you enjoyed the content, let me know in the comments. I'm always active in the comments on my other channels and on my socials. So get to know me, talk to me, you guys. And if you need any professional tax help, make sure you click the link in the description to become a client. I already introduced myself, so you guys know what it is. Thank you guys for watching. I appreciate the support. Get right, you guys. Fourth quarter is almost done. Tax season is right around the corner. You don't want to get caught slipping, especially business owners. You do not want to get caught slipping, especially in 2024 with all these new laws. As a business owner myself, I do not want to get caught up paying these penalties, and I don't want you guys paying these penalties. Because my slogan in here, one thing I always say is don't get taxed. We all pay taxes. We always have to pay taxes on things we buy, when we get paid, if we provide a service. There's taxes on everything, but the goal is to not get taxed. If you know, you know. If you don't know, what I mean by don't get taxes, don't overpay. I want to say the studies was over 2 million taxpayers overpay each and every year, and that's insane. So my job is going to always help you guys to not get taxed. So thank you guys. Until the next video, I'm out of here.